The broadcast is now starting. All attendees are in listen-only mode.
Hello, good evening, everybody. Welcome to our introduction to share investing webinar. And this webinar is brought to you by Bursa Malaysia and managed by LifeChamp. And today we are very excited to invite PC Wong, a famous author and speaker for share investing. And hi, PC.
Hi, Shane.
Yeah, welcome to join us. And before we proceed further, just want to check if you can see us. Okay. And if you can hear me clearly, please go to the control panel and click raise the hand button. Okay. If you can see us and see our slide, please go to the control panel and click raise the hand button. Okay. Let me see. Okay, excellent. There are so many of you who can hear me. All right, you may put down your hands now. Okay, you may put down your hands. Okay, we're going to begin. Now, this Bursa webinar series is designed for beginners. Okay, so today we're going to cover very basic topics just to help beginners like you to propel you towards achieving your success in stock investing. Now, so here is the disclaimer. Okay, whatever we share or PC share with us today is going to serve as an educational purpose only. In no way that we give any buy or sell call for any of the stocks. If you decide to buy any stock or sell any stock, you do it at your own risk. Is that okay? Now, this section, this webinar consists of two sections. One is the content where we share with you about what are shares, and second half we'll be talking about Q&A. So if any question, you can leave it at the question and answer box. We'll address it during the question and answer. And throughout the 90 minutes webinar, we're going to have a lot more interactive activities like polls to check your understanding. So please help us to answer the polls so that we know that you understand the concept. Now, this Bursa Introductory webinar series has four webinars. The first one is today, and if you want to learn more about what are shares, you can join our second webinar, which is scheduled on 25th of September. Then we're going to have third webinar on 30th of October, and the last one will be 27th of November. We'll talk about how to harness the power of charts. So these four webinars is designed to help beginners to embark you on the journey to create your wealth through stock investing on Bursa Malaysia. All right, now this is our speaker today, PC Wong. Allow me to introduce himself a little bit. He graduated from NUS in 1989. Just give me a minute. All right, so hang on, yeah, the webcam is turned off. All right, can you see us now? Now, he graduated from NUS in 1989, and he has more than 26 years of working experience with several public listed companies and a multinational company. He's the author of Invest in REITs. So if any question in regards to REITs, real estate investment trust, you can also put it down in the question box later. And he's a full-time investor, author, and trainer. Have been investing in Bursa International Market since 1995. Now, full-time investor means that you invest full time, right? You don't have any job, right?
Yeah, I'm jobless.
I heard that every day you read the news 16 hours a day. Is that true?
I spend most of my time reading the internet news as well as listening to podcasts.
Okay, yeah. So you have a wide understanding about what is happening around the world and as well as in Bursa Malaysia. So today we're very excited to have you here. Thank you so much, PC, for joining us. And can you tell us a little bit, what do you understand about stocks?
Basically, I think to really be a good investor, you need to really educate yourself, first of all, in financial knowledge, and that's the most important thing. You need to have a clear idea what's happening in the country as well as outside, so that you are able to know specific industries that will be trendsetters. And only then you look at opportunity on which industry to invest in.
I see. All right. Now, so when you talk about share investing, so it's very important for you to understand what are shares. Now, today we're going to share with you a few things. Firstly is what are shares. Secondly is why share investing is important to you. And third is what is a stock exchange. Fourth is what is the role of brokers. And then what are trading account and CDS account. Alright, so this is what I'm going to cover today. Now, and ultimately, we'll show you how you can use Bursa Marketplace and to find money-making information on it and how to profit using Bursa Marketplace. Now, this is a fantastic platform and invested by Bursa Malaysia to create this tool for you. If you go to other stock exchange, I think it's very hard for you to find an equivalent kind of site, which is very user-friendly, which is very insightful to help you to find the information you need to make a wise investment decision. So this is a very powerful tool which we will go through with you shortly in the webinar. Now, so PCs, what are shares?
Yeah. So shares are basically ownership, okay, giving you the ownership of a company. For example, it is a shareholder's profit or loss, which is proportionate to the amount of shares he or she owns in the company.
So it's not that lah. It's not that. When you buy shares, it's like ownership to the company. So it's keyword. Okay.
Yes. So for example, if A owns 80 million shares, and B owns 20 million shares of a 100 million market cap company. Okay. If let's say the profit is 10 million, A's profit would be 8 million and B profit would be 2 million. But if let's say the company suffer a loss of 5 million, then A loss would be 4 million and B loss would be 1 million. You can see that it's proportionate to the shareholding base. Okay, so this is basically a simple definition. But what is important? Why is investing important? Okay. So if you look at it, share investing, you are making your money work for you because inflation is working against you. So for example, if you look at it, in the year 2000, 100 ringgit will probably yield you so much goods. But in 2010, it's almost half. And by 2015, you actually have a very small portion of the goods. Now, if you look at it on the left-hand side, these are all the changes in the CPI. You can see that it's highly volatile. Sometimes it's up, sometimes it's down. Now these are the inflation. If certain times, inflation may be able to be rising at a slower pace, but certain times it can rise up quite tremendously. That's why you can see that inflation can peak up, over here from 0.6 to 1.7, and then it rises 180 over percent.
Oh, there's a lot.
Yeah, so that's why when you have certain inflationary pressure, it will actually reduce your purchasing power. So sometimes when we say we put money into a fixed deposit, but the fixed deposit most likely will be able to cover certain part of the inflation, and it will not cover wholly the inflation. That's why, if you continuously put your money in the FD, your amount of money in the future may be slightly less or equivalent. That's why you need to invest so that you not only cover the inflation, but also make money that exceed the inflation rate.
So investing is very important for all of you here.
Yeah.
As well as all of us.
Yeah, so why is share investing important? Now, the other thing is that overcome the gap between income and affordability when we look at housing. Now, if you look at it, the median income has been gradually rising, okay? Nominal growth, this is the nominal growth of the income, then the inflation rate. You can see that real growth actually is around 2.8, 5.8 after 2013, okay? Yeah, so by 2017, the real growth is 4.2. But then if you look at it, the average house price, has been outpacing the real growth, where you see here is about 6.5 and 5.8%. So even if the real growth in wages is 4.2, it still lags behind the average house price rise on an annualized basis. So that is why, for example, just to share with you, when I joined a public listed company way back in 1995, the starting pay for an executive was 2002. And recently, when I went back to chat with some of my ex-colleagues, the starting pay right now is 2008. So more than 20 years, the starting pay has only went up 30%, but then the housing in the last 20 over years has gone up, about 300 to 400%. So that's why even though salary is on the rise, but if we look at it, certain period in time, the housing will actually outpace the salary earned.
Yeah, I heard that there was one woman, old lady now, who had about 4,000 Hong Kong dollar, sorry, about 2,000 Hong Kong dollar those days, 40 years ago, and she had the choice whether to invest in the property, own a property, small apartment, or to pay for down payment for a small apartment, or to put it in the bank to save. And she chose the bank 40 years ago. And now, fast forward to 40 years now, the 2,000 Hong Kong dollar become about 4,000 over Hong Kong dollar. But with 4,000 Hong Kong dollar, she couldn't even afford a small unit of rental, of monthly rental in Hong Kong. So that's why it's very important for us to invest in the stock market.
Yeah, because stock market is something that is very highly liquid. Okay, which means you can buy and sell at a greater frequency to enable you to make money, okay, profit from the transaction. That is why, in a year, if you are a trader, you can do multiple trades, or you can be a value investor and then invest on the long term, and you still see some great appreciation in price. So another reason why you should invest, it is to achieve financial security. Now, a survey by Bank Negara Malaysia in 2015 shows that 75% of Malaysians can't even raise 1,000 in an emergency situation. Imagine, it's almost 3/4 of the Malaysian population. So, are you going to be in the 75%, or are you going to be in the 25% who can actually have that financial security, that able to come up with money in an emergency situation? Because 75% of the population can't. And according to EPF, as of 2015, 68% of members aged 54 had a saving less than 50,000 a year. I mean, sorry, not a year, 50,000 to date. Okay,
that's really
so
bad.
that is very, very bad, because if we look at it, assuming the the monthly lifestyle or annual lifestyle requires 24,000, let's say, 2,000 per month, okay? That 50,000 can't even last you 2 years.
Yeah, 2 years.
So, so that's why it's very, very important for you to actually have a so-called another source of income that will help you build your nest egg for your future retirement. So, EPF estimated that 50% of its retirees would exhaust their savings within 5 years of their retirement. Okay, so this is a very true indicator, and how just relying on savings alone can't actually help you secure a financial future that is very sound. And EPF is paying a very, very good dividend. So you actually must have something that complement your current income, as well as building a financial security for the future.
So how much savings do you think a retiree should have by the time they retire?
According to EPF, they need more than 200,000.
200,000.
Yes,
So if 1 year they spend 25,000, 200,000 can last them for 8 years.
Yeah. So
provided that they only spend, they don't grow
yes.
it. If they have 200,000 and use it to invest, compound it, maybe they can sustain for a longer period of time, right?
Yes. So that's why it's very important for you to have an income source that actually outperforms the inflation, and also outperform the dividends or savings that banks offer, or even EPF offers. Because if you can outperform that, then you actually will have some additional cash in the future. So another thing is that if you aspire to travel, to enjoy life, to have the lifestyle that you desire, then investing is fulfilling your aspirations with financial freedom. You can travel, you can stay in the best hotel, you can bask in the sun, enjoy the sunset, you know. So freedom to do anything you want, when you want it, and where you want it. So that is, you know, earlier we talked about having investing as a source of income for your future retirement. But investing can be something much more, you know, that besides future retirement where you meet your daily needs, you can also have the income to enjoy a good lifestyle.
Yeah.
So the other thing about advantages of investing in shares.
Okay. Go ahead.
Yeah, it's hassle-free, okay, in the sense that you can buy and sell anytime you want, either through a broker or on via online, okay. Then, you know, it has a very low barrier of entry because it has a low capital cost. For example, there are shares that you can buy that cost RM1 or RM2, you know, and it's you know, in Bursa is 100 shares per transaction. So if you can have the means to actually a few hundred ringgit to spare, you can select a stock and then invest in it and watch it grow. Okay, so the barrier is very, very low. Unlike if you want to invest in property, you need to actually have a down payment, or not only that, you know, even if sometimes nowadays developers say, you know, pay 0% right now, and when the property is completed, then only you start paying your loan. But then still, you know, that loan will cost you money. So how do you improve your affordability of property? By starting very young and very early in investing in something that, you know, it's very affordable for you and has a very low barrier of entry.
Yeah, like if you have only 10 ringgit, you can afford to buy one lot of 10-cent stocks.
Yeah.
Okay, one lot of 10-cent stock, which is 100 shares times 10 cents, is cost you about 10 ringgit. So long that I can afford to eat McDonald's, eat KFC, you can afford to buy shares. This is how low it can be.
Yeah. So the other thing is that you enjoy passive income as well as high liquidity. Now, when we talk about passive income, okay, we talk about investing in a company that you may not be interested, you know, to see quick capital gain, but pays a very, very good dividend. Okay, so then you can actually have passive income, because sometimes investment, you know, there is those that are high growth, which means the stock can actually have capital appreciation at a much quicker pace, and those that are value based, which means that company will keep paying you consistent dividend, often at a acceptable yield. Okay, so that you can park your money there and continue enjoying that dividend. So sometimes, you know, when you look at FD rate, which is you know, around 2 to 3% depending on the length of time that you put in. Now, if you can find a stock that gives you, you know, 5 to 7% in terms of dividend yield, then you are already outperforming both inflation and the bank's FD rate. And then, you know, over time, that stock may grow, you know, not as quick as the high growth stock, but then it may grow maybe a few percent here, a few percent there, and sometimes maybe more than 10%. And then over the longer term, you can actually have a very, very good stock. Now, for example, one particular company that I often like to use as an example is that Dialog. Okay, Dialog is more on the growth side, okay, but they also consistently pay dividend, and on and off they do have rights issue and bonus issue. Now, if you want to look at Dialog, you can go to their website, and they actually state that in their financial statement that over the years since it was first launched, you know, Dialog has been growing annually of more than 30%, you know, and that's very, very good growth. So if let's say a stock can deliver more than 30% growth in terms of capital gain, okay, average over through the years, then, you know, it is actually a very good stock. Now, for some of those that are more or less risky type of investment, you can invest in other product called real estate investment trust, which I will later discuss. So, for example, one of the REITs can actually give you between 15 to 17% annualized growth And that is also good enough, depending on your level of risk, as long as they outperform the inflation rate and also give you something that is above the bank's FD rate. Now, in terms of high liquidity, you need to invest in something that can be transacted very quickly, okay, so that you can get your cash very fast. Okay, for example, if you were to sell a property, sometimes you may need to have a broker, a property broker, and then you have to wait for people to view the apartment or your house. After many viewings, then you find one that wants to pay you. He pays a deposit. Then you have to wait until he secures a loan before you get all your money back. Okay, and that could take months. Now, in a share market, okay, in the stock market, you can buy and sell. After that, when you sell at a certain price, and then later the stock actually fall down, and then you can actually buy back again. So in that sense, it's highly liquid. Where the stock market is, the transaction can be done very fast, okay, and very quick, and you can get your money, okay, within a very short time period, normally about 3 days.
Yeah.
Or so.
So
yeah.
if you buy property, it's going to take very long for you to turn your asset into cash.
Yeah.
Yeah. But before we proceed, let's do one poll. Okay. So I'm going to launch a poll now to test your understanding. All right. So on your screen now, there is a quick poll. Okay. Hang on. Are you seeing? All right. I'm guessing that you must see the screen now. Just give it a minute. Okay. All right. So we have all right. It's half a minute past. So now I'm going to close the poll. All right. I'm going to close the poll and share the result with you. So about 98% of you picked that. Poll result shows that shares are unit of ownership of the company, and 3% of you show that shares is the unit of that. But let me tell you, shares are actually a unit of ownership of the company. So 98% of you pass. All right. So I want to hide the result, and let's do another poll. Okay. Now on your screen now, please answer, who is the biggest enemy of saving? All right. So please answer this question. Who is the biggest enemy of saving? Okay, all right. So let me close the poll now and see what are the results. Okay, you see, 97% of you pick inflation, which is the right answer, and inflation is the biggest enemy of saving. Okay, which is what we shared earlier on. Now let's go back to our second segment. What is the stock exchange at PC?
Yeah, the stock exchange is basically a place where listed financial instruments are traded. And in Malaysia, these financial instruments are traded on Bursa Malaysia.
Yeah, so in Malaysia, there's only one stock exchange, which is Bursa Malaysia. Sometimes in our country, you could see that, for example, in China, we have Shenzhen Stock Exchange, Shanghai Stock Exchange, and Hong Kong Stock Exchange. But in Malaysia, there's only one stock exchange, which is
Bursa Malaysia.
Malaysia.
So, yeah. So the importance of Bursa Malaysia to the economy. Now, very importantly, it provides the platform for companies to raise capital via IPO, which is initial public offering.
So what do you mean by raise capital?
Yeah, if you are a company owner and you have a steady set of results, your company is highly profitable, but you want to expand. And when you want to expand, although your results are good, but there's certain lack of funding that prevents you from expanding. So that is when you get the investment banks in, discuss, work out a solution, work out a initial public offering that is able to tap the capital from the marketplace, which is the public actually. So that is when they will sell shares in an initial public offering, and then potential investors can actually bid the amount of shares that they want to own, and then through a ballot system, then those successful bidders would be allocated that number of shares.
Okay. So let's say I'm a business and I want to grow my company because I feel that my company has been stagnant for a while and I need more capital. I can go through stock market to raise capital from the public. So you can share an ownership, a partial ownership of my company with the retail investor like you, and then you buy my shares, they become part of my company shareholders. So with the money that I collected from the initial public offering, which is the first time that a company offers shares to you, I can use the money for growth. To invest in R&D, to invest in the new manufacturing plant to produce more goods to sell. That's the use of Bursa Malaysia.
So because the capital raise will be invested, for example, like Shane said just now, into plant and equipment. So investing in that plant and equipment would enable construction to be done. For example, building the plant. And when you buy equipment, it is being bought through a series of supply chain. So that is how it creates growth in a sense that it generates jobs and thus creating wealth for the people. And on top of that, that capital raised, if the share price goes up, then the investor would also achieve capital gain. Okay, and most importantly, any capital raise that is put into plant, equipment, or capital goods, okay, that would actually help create jobs, and that is very important in an economy, because greater the number of jobs, the more there will be amount of money that is going to spend for consumption, and consumption would actually then goes back to more manufacturing of goods to meet that consumption. So it's a continuous cycle, okay, and that is why having a platform to raise capital is important for companies who want to expand growth, so that it helps the economy. Now, the other way is that it provides opportunity for ordinary Malaysians like you and I, okay, to participate in the company's growth. So if the companies are able to generate good profit and they declare a good dividend, you can profit in the sense that you receive that dividend, or when that company, outperform, it continuously performs beyond expectation of the investors, then share price would actually increase by a steady rate. And over the longer term period, you can cash out and then realize a tremendous capital gain. Okay, so you can actually reap the fruits of your investment. Now, the other thing is that it also provides opportunity for foreign investors to participate in Malaysia's economic growth, because as long as that company is traded, okay, foreign investor will bring in money, okay, to buy the company's shares, okay, so that the company continue to expand and then continue to create jobs and create wealth, okay. So input of foreign direct investment,
FDI.
Yes, FDI is very important, okay, to also help the company, because sometimes, a certain country may be able to raise capital from the public, but the public may only have that amount of investable money. So that's why foreign participation will actually help that company to raise capital much faster. So in that sense, investors from other foreign countries can participate and enjoy Malaysia's economic growth as well.
Yeah. So investors like you and I, and you as well, the one that I think are very important to help to boost Malaysian economy, because we are the one who provide our capital to help spur the growth of the economy.
Yes. So major financial instruments traded in Bursa, of course, you have the shares.
Which is what we talk about, ownership to the companies, not that, okay? So next poll we're going to have 100%
warrants.
correct.
Now, warrants are things like, it is an instrument that gives you the right to buy a share at a fixed price, okay? So if you want to exercise that right, you have to buy the warrant. And of course, warrant, they have an expiry period. So when if you hold on to the warrant too long and you fail to exercise that, or you fail to sell your warrant, then that value can return to zero.
Yeah, but warrant we're not going to cover in depth today because warrant is a very advanced topic. If you want to learn more about warrant, you can go and go to www.facebook.com/mylifechamp. That's where we can go to the notes section. Notes section, you'll see there's one webinar designed for warrants called Warrants 101. You can learn more about warrants from that webinar recording. But in short, if you see any share, let's say Genting, that it has a dash WA or dash WB or dash CA or something dash one, that's warrant. Okay, don't mistake it as shares.
Yeah. So you have to be careful with the alphabetical soups. Yeah. Okay. So the next one is exchange traded funds, which is ETF, and then real estate investment trust, as I mentioned earlier, which is called REITs. Yeah, and exchange traded bonds. Now, what are shares? Actually, imagine yourself as a shareholder. Okay, then being a shareholder entitles you to have voting rights, which means, okay, if you are unhappy with the management, okay, then you can exercise your right to vote against certain policies that the management call for in an annual general meeting, AGM, okay. And you can actually have equity ownership of a public listed company and dividend depending on the profitability, which means as long as you are a shareholder, when the company announces a dividend, and you can then get the dividend, provided you still own the share prior to the expiration date of the dividend. Now, then you can also enjoy appreciation or depreciation, or if you can enjoy appreciation of the share, or you may suffer a depreciation in value of the share. So shares are something which both appreciate or depreciate in value, and therefore, because of this, when it depreciates in value, it also creates an opportunity to buy into a good company, okay? And when it has appreciation in value, it allows you to sell into a profit. So sometimes depreciation is good, provided that the company is still financially strong and the company has growth potential, and therefore any depreciation in value will be a good time to invest.
So the share price go down, you can pick up the stocks, good companies on the cheap.
Yes. So, and when it goes up, you can actually sell. So being a shareholder, you enjoy all these. Yeah. Now, exchange traded funds, commonly known as ETF. ETF can track and index commodity, bonds, currencies, or a basket of assets. Now, they are similar to mutual fund, okay? Which those of you who have invested in mutual fund would know that normally the mutual fund would have a basket of stocks, sometimes a basket of currencies and bonds, okay? So there is a difference between ETF and mutual fund in the sense that ETF, you can trade live like any stocks. So mutual fund, however, the trading is based on the closing price at the end of the day. Now imagine, assuming that a major crisis suddenly happened somewhere in the US, and then it influenced Bursa Malaysia stocks as well. And then there's a drop, okay, 20% over in the US market. And similarly, there's a panic selling in Bursa Malaysia. Then what happened is that you can't sell at the early stage when you realize, as soon as you heard news that there's a fall in the US, when Bursa opened, you cannot sell the mutual fund. But in an ETF, you can immediately sell so that you do not have to witness the ETF to fall in price for a longer period and a longer percent or a deeper percentage. But mutual fund, when it based at the end of the trading day, the market could have fallen 20. So then, by that time, they based on the closing price and your value would have fallen by 20%. But ETF, if you can sell in the early morning trade, maybe you can escape with a 5% loss. Okay. Similarly, okay, if let's say the stock market suddenly have a boost, overseas, okay, there's a few percentage gain. Then in the ETF, and it's very bullish. In the ETF, you can actually buy in advance in the early morning. Whereas in the mutual fund, by that time, that mutual fund could have actually increased in price by 5%. And then you won't be able to buy in the early stage. You buy only when the market closes. So it works both ways. Now, the other thing is that trading fees are based on existing brokerage fees. Whereas mutual fund, they take a 5% upfront based on the amount invested. So when you trade, okay, there's always a brokerage fees. It seldom costs even more than 1% if, let's say, you are doing it online, okay? But if, let's say, you buy a mutual fund, they take 5%, and then certain fund may include an annual fee depending on what type of funds they are. So when your cost exposure is also much lower in an ETF. Yeah.
So am I right to say that ETF is just like a mutual fund that's traded on the stock exchange?
Yes.
All right. So I think traditionally a mutual fund which involve a distribution cost, right? For example, I go through a financial planner to sell, which is more expensive. So now, if you go to buy a mutual fund, maybe if you put 10,000 in, 500 will go to the financial planner as their commission. Then 200 will go to the asset management fee.
Yeah.
But now, if you want to take away the middleman, which is the financial planner, you can directly buy an exchange traded fund, which is similar to a mutual fund, but it's stock exchange, and then the transaction fee is significantly lower.
Yes.
Yeah, so that's what it means by an ETF. In Malaysia, there are about 9 ETF, including a gold ETF.
Yeah.
So that's why you see an ETF can also track a commodity,
yeah,
which is a gold ETF. I think it's issued by Afin Huang.
Yeah.
Yeah, and we also have index ETF which tracks the KLCI. So if you want to buy the 30 largest company in Malaysia following the index like KLCI, you can't buy the index directly, but you can buy into the index ETF, which is a KLCI ETF.
Yeah. So for some investors, they might they might feel that if you ask me to analyze individual companies, maybe a hassle. And then you might want to, if you have a bullish view of the KLCI index, then you can actually buy the ETF that tracks the KLCI to a basket of stocks. Then you can actually avoid having to analyze individual companies, and let that ETF takes charge of things. Okay, so it much depends on the individual. So if you want to, let's say you want to buy gold, okay, then you can, instead of buying physical gold, you can actually buy a gold ETF. And then that ETF then will track the price of gold.
And you don't have to store gold at home.
Yes.
Yeah. And it's a good thing you don't have to store gold at home.
Yeah.
So some of you who have challenge in stock picking, and you're very lazy to pick and dissect company, but you are generally bullish about the economy in Malaysia, then go to buy the index ETF, because that will instantly give you diversification that you need. Because instantly you can own a pool of securities in different sectors, and these are the big cap company and large cap company which are very unlikely to go under even economy is weak.
Yeah. So talk about real estate investment.
Yeah, I often heard about REITs. So can you tell us a bit more about REITs?
So REITs basically is a real estate investment trust. So what happens is that as an investor, you will purchase units in the REIT. And what the REIT does with the capital is that they will acquire assets in the real estate market. Now, the real estate could be a lot of things. It could be shopping malls. Okay, then you have REITs that specialize in shopping malls. Then you have hybrid REITs. Now, hybrid REITs means that this particular REIT has no special preference. It will just invest in any assets that it deems profitable. Okay, so then hybrid REIT would include shopping mall, warehouses, office buildings. Okay, then there are office REITs which are focusing just only on office buildings. And I think we have a healthcare REIT called the KPJ healthcare REIT as well, which is very focused in medical centers, hospitals, and centers that provide medical services. So actually, it much depends on the management of that particular REIT. So what happened is that in the real estate, they rent it out, and then they have rental income, and that income goes into the REIT. Now, at the end of a specific period, okay, some REITs actually would declare dividend on a half annual basis, some quarterly, and some just annually. So whatever it is, a REIT must distribute more than 90% of its net income back to the investor. And in this case, the REITs are very ideal for people who are less pervasive to risk. Okay, they are risk averse in the sense that they want to avoid extreme risk. Then they will want investing in a REIT is another viable alternative because you get steady dividend. Okay, and not only that, a REIT gearing ratio, which is the total borrowings over total asset, cannot be more than 50%. So in that sense, there is certain security being accorded, because sometimes companies can incur so much debt, so much so until they become a liability to the entire company's performance. Okay, and that company can actually go bust if, let's say, they are unable to repay that debt. So REITs, because they are real estate focused, and therefore there are certain policy in place to ensure that the REIT will not go overboard in acquiring a lot of debt, and therefore the gearing ratio cannot be more than 50% in Malaysia.
Yeah, so if you buy into REITs, the company should be very solvent because they won't have a lot of debt in acquiring the properties. But I think you are an expert in REIT because you published a book on invest in REITs, which become a bestseller and popular. So whatever PC says about REITs, I think is good for you to take note of. And in REITs, I think one of the important characteristics, if I'm not mistaken, is they are tax-free on corporate level. That means for the REITs itself, they don't have to pay corporate tax, because so long that they distribute more than 90% of the net income to you as the unit holders. But for you who are a unit holder, when the company is waived to pay the corporate tax, you need to incur about 10% withholding tax. But which is cool, right? Because a corporate tax will be anytime more than 10%, right? Yeah. So on a corporate level, REITs is not taxed. But when they distribute income to you, let's say they distribute RM1 per unit to you in the form of dividend, 10% tax, which is you will receive 90 cents, which is a very tax efficient play if you want to invest in real estate investment trust.
Yeah, because the normal companies, the amount of tax is 20%, and you get more than, when that exemption, less than 10%, you still get, less versus a normal corporate. Because when a normal corporate, they pay the tax, the profit will be lesser. Here, you get to enjoy the entire profit, then only you have a 10% withholding tax.
Yeah. And it allows you to buy into places where you traditionally can't buy, right? For example, how can young people like, for example, me, afford to buy a property in KLCC? Okay, this is very expensive, right? But if you buy into REITs, let's say KLCC REIT, you can own a piece of property in KLCC. You can say, oh, you see the Twin Towers.
A piece of brick actually belongs to you.
And the Mandarin Oriental, if you like Sunway City, you can buy the Sunway REITs. Then you can say, look at this Sunway City, I'm one of the shareholders. Okay, isn't that powerful?
Yeah, it allows you to buy into prime property without really, having to invest a lot of money into it. Okay, and you can actually watch your REIT go, because some of the better REITs, do have an annualized growth, including capital gain and also dividend yield added in together, that averages around 12 to 15 or 18% depending on certain cycles. So that is already, many times higher than the FD that you enjoy in the savings.
Yeah, it's very important.
Yeah, the other one is exchange traded bonds. It's similar to bonds, but they are traded in the stock exchange instead of a bond market. Now they allow for fixed annual rate of interest over the life of the bond, and lower risk versus stocks where the company's profitability may fluctuate. So when you buy a certain bond, okay, it's fixed, but sometimes companies' profitability might fluctuate, and therefore the dividend could either go up or go down at times when the company does not perform to expectations. And sometimes a company that suffers a loss may not declare a dividend at all. But when you buy a forward bond, okay, then that fixed annual return is there for you to enjoy. And they are traded live like stocks and ETFs.
Okay, now before we go to the next section, let us launch another poll. All right, on your screen now, there's a question. We'll ask you which of the following instruments is not traded on Bursa Malaysia. All right, please answer the poll now, which will test whether you're paying attention or not. Okay, I give you another 15 seconds to answer the questions. Okay, which of the following instrument is not traded on Bursa Malaysia? Is it shares, ETF, warrants, crude oil, or REITs? Okay, time's up. It's not, it's not, okay? It's not traded. Time's up. Okay, let me share the result with you. Alright, 2% of you think ETF is not traded on Bursa Malaysia. 95% think that crude oil is not traded on Bursa Malaysia. And 2% of you think that REIT is not traded on Bursa Malaysia. We have just covered. Alright, that the correct answer is crude oil. Okay, it's not traded on Bursa Malaysia. Okay, cool. Now let's continue with our section.
Yeah, so we are going to talk about the role of brokers, trading account, and CDS account. Now, the role of brokers. Now, brokers here we refer to as brokerage firms. Now, brokerage firms are actually financial institutions licensed to facilitate the buying and selling of listed securities such as shares. Now, you cannot go to Bursa and then watch the price go up and down and suddenly find the person on Bursa and tell him, I want to buy this, I want to sell that. Okay, you can't. It has to be managed through a platform, okay, that is provided by the brokerage firms. Okay, so you can opt to trade online, which is an online platform, or retain the services of a broker. So, of course, if you trade online by yourself, that brokerage fees is actually much lower. So, but if you retain the services of a broker, of course, then sometimes you have to call, and sometimes he or she is occupied, and you may not buy or sell in the time that you wanted to. So, it is much better, in my opinion, that you start looking at trading online, because then you can actually monitor your trade rather than having to call frequently to check the status of your trade. Okay. So another thing is that brokerage firms are regulated by the Securities Commission of Malaysia. So anyone who wants to start a brokerage firm, must meet certain funding and proper corporate governance. There must be adequacy of funding. Okay, for example, if you see that the stock market is so lucrative, you cannot just say, I want to become a broker. Okay, so that's why there is strict regulations to ensure that the corporate governance and the financial governance of the financial market in Malaysia is of good standards, so that people have confidence in the stock market. Because if things are not regulated, okay, then the confidence in the stock market will be affected. And that is why regulations are important. And in Malaysia, brokerage firms in that sense are regulated. So what is a CDS account? Now, a CDS, called a Central Depository System, account is fully owned and operated by Bursa Malaysia Depository. Now, it keeps a record of the ownership and movement of shares traded on Bursa. Okay, if you buy shares, the shares will be credited into your CDS account, and when you sell shares, the shares will be debited from your CDS account. So this is how it's best to illustrate it. Okay, we have the trading environment, which is the trading platform provided by the brokerage firm. Now, in this trading platform, there's a buyer and there is a seller. Now, if both agree, okay, to a price for 1,000 shares of company A, okay, then what happens is that it goes to step 2, which the seller's account is debited at 1,000 shares of company A. Okay, so then what happens is that buyer account is credited with 1,000 shares of company A. Okay, so all this goes to here, and then it's all managed through the CDS account. So very importantly, the CDS keep tracks of the movement of shares so that no one can say that, hey, I've bought, but then I've not received. Way back before there was a CDS account, the whole transaction is actually very interesting, because if you are a seller, you have to deposit the real share itself, okay, which means you really have to go to the brokerage and deposit that scrip, okay, which is the share certificate, and if let's say you buy, then you have to collect it, so that's why having a CDS account and enable a fully electronic trading system, to be managed, and that's why the CDS is very important.
Which is safer, like, let's say if you keep your script at home and your house flood, right? Your script will be gone.
Yes, and also if someone stole your script, and that's it. Okay, so all these are stored electronically, and it ensures, proper accounting, and also it ensures the safety of your shares. So what is a trading account? Now, in addition to a CDS account, you can also open a trading account with a broker. So what happens is that, even before you trade, you need to have a CDS account. Okay, then you can have a trading account with a broker. Now, a trading account is maintained by the broker and is used to place your buy and sell order in the stock market. Now, you can't just have a CDS account and then immediately start trading, because as I showed you earlier, all this is done through a platform that is provided by the brokerage firm itself. Now, the trading account enables you to trade financial securities listed in Bursa Malaysia. So before you start trading, make sure you have your CDS account, okay, and then you have a trading account. So these two are a must. Okay, you can't have one and then say you want to trade. Okay, it cannot happen. So make sure if you want to do so, you have both things done correctly.
Yeah, but it is very easy. You don't have to go to a broker and go to a Bursa, because when you open an account with a broker, they will also attach a form, CDS account for you to open. So you only need to find your broker, because your broker will carry the CDS account opening form.
Yeah.
Alright, so before we go to the next section, let us launch a poll to test whether you're paying attention or not. So now on the screen now, there's this question: a CDS account is maintained by Bursa Malaysia. Is this statement true or is this statement false? Okay, so we have seen that 30 seconds have passed. Let us just share the poll with you. Alright, let me share the result. So 79% say that the statement is true, which is the CDS account is maintained by the Bursa Malaysia, while 21% of you say that CDS account is maintained by Bursa Malaysia, which is a false statement. The answer is the true statement. The CDS account is maintained by Bursa Malaysia, but the trading account is maintained by the broker. Alright, so please pay attention next time. Okay, let's go to the next section, which is how to start investing. Can you tell us a bit more, PC?
So how to start investing? Now, you need to open accounts. Now, in order to trade shares, you must open a central depository system CDS account and a trading account with one of the stockbrokers. As Shane has mentioned just now, okay, you cannot separate the two. Okay, they must be together and done at a brokerage firm. Okay, so trade through dealers representative Now there you can actually trade through a salaried dealer
or remiser.
or remiser. Okay.
Either one is fine.
Yes. So the other way is that you can also trade online.
Yeah, you can go through you trade online yourself, but there will be a dealer who
okay.
Yeah.
So 4 steps to start investing. Okay, one is select a stockbroker, then apply for a trading account
and a CDS account.
Then deposit money into your trading account and perform your trading.
Yeah, as simple as that.
Yeah. So importantly, always make sure you have money kept in the account. Yeah. Because sometimes you might actually keep track of you need to keep track of your money that you are able to trade. Okay, so when you have, let's say you allocated, let's say 5,000 ringgit into to start your investment journey, and then you suddenly got very excited, you keep on buying and buying and buying, and then you realize that you have over exceeded that and you cannot have extra money put in. So what will happen is that at the end of the trading days, which is actually T plus 3. Okay, if at the end of that T plus 3 trading day that you do not have sufficient funds, then what will happen is that they will force sell your some of your holding
on T plus 4.
Yeah, on T plus 4.
Okay. They will force sell you on T plus 4.
Yeah.
On T plus 3, you don't have enough funds.
Yeah.
They will force sell you on T plus 4.
So always make sure that you have that amount available, okay, and not over exceeded your budget. Okay. Otherwise, sometimes forced selling can, when the stock is falling down and then forced selling, then suddenly you realize that you actually have a loss.
Okay, so let me explain what is T plus 3. T plus 3 means that T stands for transaction day. If on, let's say today is Tuesday, when you buy any shares, this is your T day. Wednesday is your T plus 1, which is 1 day after this. And the transaction notes will be couriered to you. And Thursday is a T plus 2. And your Friday is a T plus 3, which is 3 days after your transaction day. On Friday, you must pay the money, alright? So, and if by Friday you didn't pay the money to buy the shares, on the next following trade day, which is Monday, your broker will help you to force sell some of the shares, right? So this is what happened when T plus 4, if you did not pay by T plus 3. That's what you mean?
Yeah.
Okay. So on the screen now, there's a licensed brokers in Malaysia.
So as you can see, there are a lot being available. So sometimes for you might want to go back to the same bank that you already have an account, so that you can actually do the crediting and debiting of the funds much easier. Okay.
Yeah. So if you open an account, if you already have a trading account and the logo don't match any of this on the screen right now, yeah, you better quickly withdraw and run away, okay? Because they are not licensed broker. But in general, those licensed broker are big investment banks or securities firms that are listed here, right? So different brokers have a different brokerage fee and so on. So you need to check out, their fee and so on, their platform, which one is more powerful, which one is give you a better rate, and so you can check them out.
So always you can do your own due diligence by checking which one gives you a better rate, okay, based on the your convenience of going to the broker or to the bank. Yeah. So
all right. So before we go to the next segment, let us launch a poll. Okay. Which of the following is not a licensed broker in Malaysia? All right. Please choose your answer. Okay, 15 seconds have passed. Give it another 10 more seconds. Wow, PC take a sip of water. Okay, now time's up. Let me show you the result. So here is the result. Okay, 2% of you think Public Investment Bank is not a licensed broker, and 90% think Malacca Securities is not a licensed broker, 79% think FXCN is not a licensed broker. The answer is, majority pick the right answer. FXCN is not a licensed broker in Malaysia. Alright, the rest are licensed broker, including Malacca Securities. Okay, so now let me go back to the slide. So now we have come to Bursa Marketplace, which is a very powerful platform that we want to showcase this to you. So now this is a platform where Bursa Malaysia has invested a lot of money to develop, and that so that retail investor like you and me can learn, try and apply. So what do I mean? So first thing you can do at Bursa Marketplace, which is learn. So the URL is www.bursamarketplace.com. So when you go to Bursa Marketplace, you can see there's a learning section which has all the videos and reading materials for you, designed not only for beginners but also for intermediate and advanced users. All right, we can do a platform demonstration later. And then if you are not familiar with certain financial terms of the jargons, you can go to the glossary. That's where you can find out which terms that you don't understand and find out what does it mean. And we also have events. All right, so Bursa Malaysia and the brokers will organize events. Usually are investor education events. So if you go to the Bursa Marketplace event site, you'll see a lot more events. So you can pick the right events for you. Some of them are organized by brokers, some of them are organized by Bursa Malaysia. Okay, so most of these events are free. Okay, feel free to join them. And the second function you can do is try. Okay, try. Try means there are a lot of tools for you to experiment. And the first tool I want to share with you is alpha indicator and analyst consensus. So these analyst consensus are powerful quantitative tool developed by Thomson Reuters. Okay, so the alpha indicators are developed by Thomson Reuters, but analyst consensus. What happens is that investment banks and the securities firm will have an analyst team who cover the stock for you. For example, more popular stock like AirAsia, Nestle. These are the companies that have been covered by the analysts. So for example, Maybank Investment Bank will cover this AirAsia and say this AirAsia, for example, Maybank say can buy. Okay, target price is 5 ringgit, and CIMB, for example, say that AirAsia can buy also. Target price is 4 ringgit 80 cent, and Public Investment Bank say AirAsia can hold, and maybe another bank say AirAsia can sell. Okay, at about now is the good price to sell. So what happened is Bursa Marketplace take all these investment banks or the brokerage firms, analyst team, and then they aggregate all their data and feature it on Bursa Marketplace. So they can show you, if you go to airasia.com or AirAsia, go to AirAsia, search AirAsia on Bursa Marketplace, you see AirAsia, what is the consensus target price. And you see that there are 8 brokerage firms who give a buy call, 2 brokerage firms will give a hold call, and the other 3 brokerage firms give a sell call. Okay, so what it saves you tons of time to research the company. Okay, and then to read all the analyst report, analyst consensus, because in Bursa Marketplace it has aggregated all these analyst consensus at one place. Then you know what is a consensus target price. Okay, how much more stand can it grow? So these are very powerful tools that Bursa Malaysia have it available for you only at bursamarketplace.com. Okay, and this tool is free of charge. Now, next tool you have is a stock screener. So just imagine that, let's say you have your criteria. Let's say the first criteria you have is I want to invest in only big or large cap stock. And then the second criteria is you want a stock that has a growing at a certain rate. So the third criteria is you want a stock that are not so expensive. So you put in all your criteria and then you click screen, then the companies that fulfill your criteria will come out. We can do some demonstration later. Okay, and then we have a heat map. We show you which are the active stock on that day and which are the declining stock, which are the stock that gains. And then we also have a research, which feature all the research reports that the brokerage houses have done. Okay, so and the third thing you can do is apply. You can apply whatever knowledge you have and strategies you have on Bursa Malaysia. What do I mean? There's a My Market, which is a dashboard for you. You can use this My Market to create a virtual portfolio or demo portfolio, and you can use this demo portfolio and buy the stocks that you think can grow, or sell the stock that you think will stop growing already, and test your strategies. Okay, and the beauty of it is risk-free. That means because you're not putting in real money, it's a perfect platform for you to practice your strategy, practice your investing strategy, or practice your trading strategy. So you can use it, have a virtual or demo portfolio, and with demo money, and you can start practicing your skill, sharpen your axe, so that when you go to a real market, okay, one chop can chop the tree. And there's a watch list for you to key in all the stock that you want to keep track. And there's also this portfolio that will contains all the stock that give you a snapshot on whether your portfolio has grown up, portfolio have grown down. So help you to have a gauge of the portfolio performance. And you also have futures. Now, not only you can trade stocks, you can also have a futures portfolio. Futures is a derivative contract. So you can also give you a chance to trade and experience your future trading strategy. And if you want to find a broker, Click to Trade offers a convenient access to your broker. Just fill in the form and broker will contact you when you are ready to apply on the real stock market. Okay, and you can register as a user at www.bursamarketplace.com. You can download the Bursa Marketplace app on mobile app on Android or iOS. We have it available. So you see, a Bursa Marketplace tool is just a fingertip away from your phone. So please download this app, go to the App Store or go to the Play Store and download the Bursa Marketplace mobile app on your phone. Okay, and watch out for the events in the happenings section. So you want to stay more informed of the update of the Bursa Malaysia events, you can follow Bursa Marketplace, Twitter, YouTube channel, Facebook or Instagram. Use the chat function. That's where you can talk to them. Alright, so before we go to the question and answer section, we want to do some demo. Okay, so give me a minute. Let me just do some demo for you. Okay. So on the screen now, I'm showing you a Bursa Marketplace. So this is a Bursa Marketplace. So make sure you key www.bursamarketplace.com. So this is the website of Bursa Marketplace homepage. Okay, but let me go to the tool. Okay, there's a learn section. So let me go to the learn and click the learn section. You see, there are beginner topic which teach you what are shares, the role of Bursa, raising capital, what is an IPO. And then there are other sections here which shows you why invest in shares, which type of investor are you. So these are all the basic materials for the beginners to understand what are stock markets. And then we also have intermediate one. Just click on it, intermediate. Then you see all the intermediate strategy. You can download the learning PDF. You learn the new things. Okay, learn what is the different strategy between fundamental and between technical analysis. Okay, then you can go to advanced one. If you're an advanced user, you want for some learning materials, you can click advanced page and then watch this page for more articles next month. So this month the articles are finished. So anyway, so these are the learn tool for you. You can click start stock and grocery and so on. Okay, and then you can go to you can play some games here. Okay, there are some games. You need to register to have games. All right. So you can go to open go to play some game for entertainment, which are stock related game, or you can go to the market. Okay, to see what is happening to the market now. Today you see, on the 28th of August, we have the today market close up. KLCF from closing price from the opening price 1812 go up to 1826, up about 14 points today, and there are about 2.1 billion shares exchange hand. And the KLCI is up 0.84%, FBN 100 is up 0.53%, FBN Emas is up 0.5%, FBN Hijrah is up 0.71%, and FBN ACE is now 0.34%. So these are the active counters. Okay, and then you can go to these are the market. You can go to find stock or ETF or REITs or warrants, fixed income, anything you find is available here. You can go to the tools, for example, screener. Okay, for example, you want to screen analyst recommendation only buy. Okay, so if you click buy only, there are 33 companies that analysts say can buy now. Okay, and then let's say you want an industry, that is consumer non-cyclicals. Okay, you click, there are 4 companies that fit, that's in a consumer's non-cyclical company that analysts give a buy recommendation, and out of which you want it to be up to 100 million. There's none. Okay, click all, that's okay. So share price, let's say you want PE ratio that is between below 10. There's one. So only one company is below 10. It's cheap. Okay, let's click show result. Okay, come out Sarawak oil palm. So this is a company that fulfills your requirement. But let's say if you don't want this, you want to choose any sector, it's also okay as long as there's a buy recommendation. Okay, then you pick PE. Let's say you want the price is cheap. You want a 5-year earning per share growth. Let's say up at least 0%, and dividend yield up to 5%. And then then you can click search. There are 8 stocks that fulfill this criteria, and see the 8 stocks that come out. Okay, these are 8 stocks: Magnitech, Ambiver, RC, TT Jayaland. So these are the powerful feature of this stock screener. And of course, we also have the Hitman, Marketplace Guru, and so on that tell you which are the guru that you can follow on Bursa Malaysia, which are very popular. So you can go to this Marketplace Guru and search for all the gurus that you think is good that you want to follow. And then we also have events. Okay, go to events. You see there are so many events that's organized by a different broker, organized by Bursa Malaysia. This is the event today. Okay, 28th of August, introductory webinar series, which is the first webinar for the entire 4th series. And then, so you have so many things that you have available here. Just come to here and check the webinar you want for yourself. Okay, and this is the dashboard. Okay, but you need to register as a user to get started with the dashboard. Okay, if you want to find any stock, just click search and then type in the stock that you like. Let's say, let me type in. Let's say you type AirAsia. Okay. Okay, you see AirAsia, then you find AirAsia. Okay. You see AirAsia Group has come up. Today it's trading at 3.39 ringgit. The consensus target price you see here is 4 ringgit and 10 cents. Difference now is between 3 ringgit 39 cents is 0.71 cents. There's a potential gain of 21% according to the analysts. So analysts, a majority of analysts feel that it will go up to 4 ringgit and 10 cents is a fair price. So these are the key statistics. Okay. The earning per share now is 49.3 cents. Profit now is 2.1 million. And then this is a share chart, and these are the financials and so on. So this is a very powerful platform of Bursa Marketplace. So make sure that you know how to use it. Okay. So now let me go back to the Q&A session. Before we do the Q&A session, let us do the last poll of the day. Okay, I'm going to launch this poll, which is whether this statement is true or not. You can screen stocks using Bursa Marketplace, true or false. Okay, please help us to understand whether you understand correctly. Okay, is it true that you can screen stocks using Bursa Marketplace? Okay, 10 more seconds before I close the poll. In the meantime, if you have any question, please put it in the question box, and then PC will or me will try to answer. Okay, so I'm going to close the poll now and share the result with you. There are 97% which say that it is true, 3% say it's false. The answer is true. So congratulations to 97% of you who get it right, and 3% of you who say that it is false. You need to pay more attention. Plus, we just demo to you that you can screen stock using Bursa Marketplace. Now, we are now going to Q&A, so let me see what are the questions we have available online now. Okay. All right, do you have any questions? Okay, is there any market maker is controlling the ETF? There's less total volume traded in ETF. So what do you think?
I think the ETF, there is some market makers, but I think the most importantly, you need to know what drives the ETFs, whether it is due to economic or certain industrial trend. The At the end of the day, if let's say there is something that's very positive for the ETF, then I think it's still worthwhile to invest, regardless whether there is market makers or not.
Okay, and at the present moment, ETF market here is still very illiquid. So, but some concern that you may have, but you can still go and buy and sell. But you need to be aware that but there are more and more people are coming into ETF. ETF is a growing market. I'm sure that ETF will grow well in Malaysia as well. Okay, so we'll answer that ETF market maker question. So, what are the criteria of a good broker?
I think the criteria of a good broker is that, of course, they charge one of the lowest fees, which I think you have to do your own due diligence to check which broker actually have the lowest fees based on meeting your criteria. Okay, because if you are a very active trader, any slight percentages, okay, could actually influence your profit over a very long term. But then again, I think you need to have something that is a broker that is convenient in terms of meeting your, for example, if let's say you already owns an account in Maybank, you might want to select, let's say Maybank Kim Eng Securities, because it makes that transaction, the flow much easier, okay, where you can actually have a auto deduct kind of thing. Whereas if let's say you have a broker that is a non-bank, they might have a cheaper rate, but then you might have to do the payment, okay, through an online banking transaction. So these are the kind of criteria that you must consider before selecting one. Of course, ultimately it will be that offers the lowest rate, okay, will give you the better return over longer term period.
Okay, so yeah, but for me, good broker would mean that the broker has a reliable platform, and for me, of course, lower fee is better. But some broker, I would rather pay a higher fee because they can service me better. The remisier can service me better. Okay, so it's up to you whether you want do yourself type. Do yourself means they will charge you lower brokerage fee, or you want to have more service from your stockbroker, then they will charge you a bit higher brokerage fee. That's for me. So the next question we have on the screen is, what is the difference between investing in shares and in Forex?
Shares are something that you can keep, okay, and grow over the long term. For example, you get dividend, okay, but in Forex, it's basically trading. It's not. I don't see Forex as investing, but more of trading if you really want to make money, because normally the percentage growth in the Forex, okay, can be very little, or suddenly it can be huge. For example, if you are trading Forex and you are pairing US dollar versus an emerging currency. Now, what happened was for the past week, certain emerging currencies actually fell. Now, for example, if you are buying it with the hope that emerging market currency can go up versus the US dollar, then that fall, within weeks, of a lot of a very high percentage, can see, you suffer tremendous loss. So I always see that shares as something that you can invest in for long-term growth and where you get dividend. Now, even if you buy you can hold physical currency of another country, hoping that it will go up. If you hold it physically in your own home, you might not earn any interest whatsoever. But you can open a Forex account in a bank. But I think nowadays it's more restrictive because unless you are doing business or something like that. And also, sometimes when you open a Forex account in a bank to enjoy small little interest, you still need a substantial amount. But in terms of shares, you can start at a very small amount and you can still earn dividend that will outperform whatever interest that a bank is willing to pay, whether in ringgit or in a foreign currency.
Okay, understand. Now, next question is, as a beginner, what type of stock should I invest in?
If you are a beginner, and I often like to suggest, okay, you go for something that is safe, that you feel a bit more secure, and that is why I often encourage people to start on REITs. Although the capital appreciation is not much, but at least that dividend is much higher versus other type of shares. Then you can, and it's much lower risk because there's always a limit to the gearing ratio at 50%, which means company cannot take too high a risk to actually incur a lot of debt. So in that sense, if you're a beginner, look for REITs to start up, just to have a feel of the market, okay, and so that your risk is also much lower. The other way, if let's say you have a much higher tolerance for risk, then you start out with those larger cap companies, okay, that is more steady, and that in any financial crisis, they will still be there, and if not, becoming much stronger after that. Because certain companies like Nestle during financial crisis, because they are very, very big, okay, they have the resources. So sometimes during a financial crisis, you may see them acquiring even more assets, and these companies then will have further growth in the future. So it depends on whether you have that monetary resources, whether you start small on REITs which are lower price, or you buy, if you have the resources, you can buy larger cap companies that are very, the blue chip companies that are very, very sound.
Okay. Yeah. So now, what kind of stocks as a beginner should avoid?
I think you should avoid, most importantly, I think if you want to look at certain companies, okay, the one that has the total liabilities more than the total equity, it's best you avoid those first. Mainly because total liabilities are debt. Okay, when the debt is more than the equity, is something that I'm a bit more concerned. Okay, and also, if you are a beginner, look for companies that are generating revenue growth or net profit growth. Okay, don't buy a company that is suffering revenue loss consistently, or net profit loss, net loss, okay? Because if you are a beginner, you might not have that appetite for that kind of risk, okay? So don't go for stocks that are actually, you see a lot of negative figures, so avoid those.
Yeah. Even for more experienced investor like us, I think I would also avoid company that lose money in general. So to avoid company that lose money, and to avoid company which have a lot of debt, that's from PC. All right. So now, do you think it is a good time to invest in REITs now? Because the person who asked the question see that the property market is not going anywhere.
If you look at it, when it comes to REITs, you have to look at the potential. Now, if you what are the kind of REITs that will normally perform even when the market is not very vibrant in like property market? Okay, first thing is that one, unless the REIT is located in a very prime area, okay, in which case, okay, assuming it is an office or shopping REIT, you have to ask yourself, would that particular place have a lot of difficulties in finding a parking area? Now, if let's say that particular place have a very difficult time in finding a parking area, then that means that the occupancy in that place is very high, and there will be good income from that particular REIT. Now, the other thing is that what do people need even when the economy is doing badly? Healthcare. Okay, so these are the things you can ask yourself. Okay, so you might want to look at a particular healthcare REIT. Okay, watch its price movement, check against its yield, whether its yield meet your target or not. So, for example, you set a 5% dividend yield, okay, which is the dividend divided by the share price. Will that particular REIT help you achieve that. If not, then you watch for certain price movement so that when the price goes down, the yield will have a tendency to go up. So you buy only when that yield, achieve your target.
Okay, now where can we get reliable and updated news information, credible news?
I think just now Shane has shared with you Bursa Marketplace for a lot of updates regarding the stock, okay, particular stocks. And the other thing is to look at certain news portal, okay. For example, if you are looking at certain, also do look at certain foreign media, for example, like CNBC or Bloomberg, that gives you an idea what's happening outside of Malaysia, which can influence the local stock market here. The other thing is that to look at our own local online portal, okay, like Star Online and such, that sometimes the news feed may be much faster, okay. That will give you certain ideas of, like our country's GDP, our country's manufacturing, things like that, that can actually give indication of where our country economy stands.
Yeah, I also like to use the
The
age.
age, yeah.
So, is there a minimum cash that we need to deposit in the trading account?
I think the
The answer is no.
Yeah.
The answer is no. And so the next question is, for a beginner investor, how much do you think we need to put in to get a good start?
I think the most important thing is to invest within your means, okay? What I would like to say is that if you are willing to invest with 1,000 or 3,000 ringgit, okay, you have to tell yourself that you can actually lose this 1,000 or 3,000 ringgit, which means prepare to lose that its value eventually would be zero. Okay, if you want to invest, you must have that mindset. Okay, so that you are able to accept the worst of circumstances. When you are able to accept the worst of circumstances, then your mind is then psyched up to invest. If you want to invest thinking that I must make money, then you would actually be restricting yourself on a lot of opportunities, because investment is all about how to allocate your risk, so that when you build your portfolio, you will have something that, for example, combination of REITs which are which actually have long-term growth with good dividend. Then you have a bit that is high growth that can give you greater capital gain. So as you mature towards that stage, you are able to build a portfolio. So starting out depends on your ability to accept losses. So, but I think, okay, anything, if you can start off with a few hundred, you can start off with a few hundred. But then, of course, the transaction fees, because it's as percentage or a minimum of that amount, that of a certain amount, that transaction cost may be slightly higher. So if you want to start with 500 to feel at peace, with your ability to invest, then it can also start at a few hundred. But at the end of the day, is whether you are able to be prepared that you might lose money, but then you can also make money.
Okay. Yeah, thank you, PC. And we can also do one last question. We have still a lot of questions on our screen. I think people are very engaged and excited to ask you questions, but let's do a last one. Do you think it's more profitable or to invest in large cap stock or small cap stock or safer for beginners?
I think if you have the choice, okay, go for steady company that has a proven strategy. Okay, that you can look back, going to Bursa Marketplace, you can check the number of years, okay, that you have seen steady growth in the total assets, the net assets, the equity, as well as steady growth in revenue and in profit. So when you have that already, then that will determine that the company is okay. Is to really make sure that it's safe. Okay, make sure that the total liabilities, okay, does not exceed the total equity, which is the total net asset. Then when all these criteria are met, then you can actually start investing. It could be a smaller cap company or medium cap company, but it could also be a large cap company. So at the end of the day, once you have that criteria met, it then moves back to how much money are you willing to put in.
Excellent. All right. So now we have come to the end of the question and answer sessions. Okay. All right. So now I have a few announcements. Firstly is waiver on clearing and trading fee, and all new investors will be given a fee waiver on trading and clearing for 6 months, effective 1st March 2018. So if you are all new investor, I suggest you to sign up the brokerage account soon, because the 1st of August, the last day that the fee will be waived for new traders. So if you're a new trader, don't have any CDS account, please sign up quickly. And then stamp duty for mid and small cap stock will be waived for a period of 3 years from 1st of March 2018. So if you buy small mid cap stock, no need to pay stamp duty to the government. And lastly, stamp duty for ETF and structural warrants will be waived effective 1st January 2018 for a period of 3 years as well. So if you trade ETF or you trade structural warrants, you don't have to pay any stamp duty. And last but not least, which is very important, is next webinar, introductory webinar for beginners, which will talk about the mystery of investing decoded. So in this webinar, we will tell you a lot more about the myth, and we want to debunk this myth together with you. So please register for this webinar. In the chat box, I've given you the link in the chat box. You can register using the link in the chat box that will be sent to you. Please quickly register, because as usual, our registration is only meant for first 100 people. So grab your seat now. Okay, with that, I want to thank you, PC, for joining our webinar today. Appreciate your time traveling so far to our place to do this webinar for all of you who tuned in online today. And I think PC has shared valuable information for you to help you kickstart you and embark you on a journey to be a successful investor on Bursa Malaysia. And once again, this webinar is brought to you by Bursa Malaysia and managed by us, LifeChamp. And this is Shane Chu signing off. And thank you, PC, for being our panelist for this webinar today.
Yep.
Thank you very much.
Thank you very much, and have a good evening.
Yeah, have a pleasant rest of the day, guys. See you again. Bye-bye.